Good afternoon, ladies and gentlemen. Welcome to the digital conference held by Amundi. We called it Road to Recovery. And I will be your host. I'm Markéta Bidermanová. I work for Seznam Zprávy and the economic board of Seznam Zprávy. But now let's launch the conference, and the person to launch it is, of course, the CEO of Amundi, Frank du Plessis, who is responsible for Amundi's activities in the Czech Republic and Slovakia, but also Bulgaria, Romania, Croatia, and Slovenia. Frank, the floor is yours.
Good morning. It's my pleasure to welcome you at the second edition of digital event organized by Amundi Czech Republic. As we are broadcasting to several countries today, let me greet naše kolegy v České republice. Dobrý den, vítejte. Našich kolegov na Slovensku, dobrý deň, vítajte. A naši kolegy v Bulgaria, dobar den, dobré došli. We are taking the opportunity of our seasonal crossroad to renew the digital experience. Hopefully, next session will be in the traditional physical format so that we can meet. In 2020, we will hardly find more commented and more publicly discussed topic than COVID-19 and its impact. Much has been said and written. I believe it's time to keep looking for a way out. Reason why the main theme of our crossroads is called the road to recovery. With every digital edition, we like to go further and offer you more. Today we have Czech experts, thematic guests and global speakers. They will take you through attractive themes and stress the importance of responsible investment, as it will help and contribute to the ongoing changes. And do not hesitate to ask questions during the broadcast. Vote and tell us what you've enjoyed and what improvements we could make. I hope you will take full advantage of all this information you'll get today, exchanges, and ultimately be inspired by it. Now, it's time to enjoy.
So that was the CEO's introduction. That was Frank du Plessis. But now let's turn to the agenda of this conference. We'll start with the global outlook of the financial markets. Let me move on to the second theme, which is the road to recovery. The key part is the third one, which we called investment best ideas, which will tell us what's the best to invest in. We'll talk about the ESG philosophy, environmental social governance, and we will talk in detail about individual products, about multi-asset sustainable future, about the CPR Global Disruptive Opportunities Fund, and about Amundi Funds Poland Capital Growth. And of course, we'll give then a summary of all these funds. Not just people, but also markets experienced a huge shock at the start of this year. Some of us still haven't quite recovered, I don't think, but funds have, and quite quickly. So what's the situation of the financial markets today, and what will the near future hold? That's our topic for Didier Borovsky.
Hello, everybody. 2020 was an exceptional year. We had, in fact, the most important recession ever seen in modern times, triggered by the COVID-19 crisis. But this crisis, this recession was very atypical. It was a crisis that has had a strong impact on services. And we know that with lockdown policies, and we know that it takes time, in fact, to exit from this kind of recession. What was very important in 2020 is that this crisis has triggered an exceptional policy response in order to maintain the economy. And it's not, monetary policy is no longer the only game in town. In fact, fiscal policies have been key in 2020. They have maintained incomes, and that bodes well, I would say, for the cyclical recovery in 2021. Against this backdrop, in fact, risky assets have performed quite well, quite well, but we believe that we are not out of the woods yet because there are long-lasting traces. There will be long-lasting traces of the current shock for certain sectors. The key question now is about vaccine. Is it a game changer? To some extent, it is, but it's a more binary even for the economy than for markets. For the economy, it's quite clear that looking ahead, should we face a new wave of COVID, it would not trigger the same kind of stop-and-go policies. So that should be welcome. And bear in mind that we have had no financial crisis, and that savings are abundant, that you have huge investment needs. So at the end of the day, the return of confidence should be good news to kickstart the global economy. That being said, we have also to understand that you have many logistical challenges with vaccinations that may delay, in fact, the availability of vaccine in advanced economies and even more so in emerging economies. So to put it in a nutshell, for vaccines, clearly it clears the horizon in the medium term, but we still see short-term risk for the first half of 2021. Regarding the global recovery that we expect, the important point is that to say that we expect an uneven recovery at the global level. The recovery, in fact, GDP will return to its pre-crisis level by the end of 2021 in the United States, the second half of 2022 in Europe, while in Asia, and in particular in China, we see a V-shaped recovery, and GDP is already above its 2019 level. We expect no inflation or little inflation, I would say, in this cyclical recovery. Inflation expectations, however, should trend higher, in particular in the United States, and that may, in fact, generate some steepening of the yield curve, higher interest rates. But it will be, I would say, under control by the Federal Reserve. Governments, something very important, governments will need to maintain their fiscal and monetary policies in order to bridge the gap until the vaccination is well advanced. Regarding asset allocation, the key point is that we expect liquidity to remain very abundant. We expect low bond yields for an extended period of time. Against this backdrop, we believe that risky assets are still very attractive. And in particular, I will mention first the fact that it's time to add exposure or to rotate from high yield into the equity space, and within the equity space to rotate towards cyclical and value names that are still supported by this cyclical recovery. It's also time to add some exposure to the EM assets. We expect the dollar to slide further, and in particular toward emerging currencies, and the emerging economies, and in particular Asia, will be supported by the resilience from an economic standpoint of this region. Finally, we also like very much the ESG thematic that has performed quite well in 2020, and that should be boosted further in 2021 by the election of Biden and the return of the United States in the Paris Accord. To put it in a nutshell, we believe that we are not out of the woods, but there is a cyclical recovery which is ongoing, and it's clearly something that should encourage investors to increase the diversification in their portfolios. We face a changing world, but a changing world, we believe, is a world of opportunities for investors.
That was Didier Borovsky and his outlook of global markets. But of course, Czechs always need to have something specific, which is why I have two guests here. Petr Zajíc, Senior Portfolio Manager at Amundi, and Petr Šimčák, Head of Private Banking at Amundi. Good afternoon to you. And both gentlemen are also here for you, the viewers, because they are ready to answer your questions. There are two options, two ways you can ask. If you're watching on the Amundi website, then on the right there's a box where you can easily enter your question. Anything you type in, we'll be happy to answer. And if you're watching us on YouTube, You can also send your questions. Just look at the website sli.do, write down the hashtag Amundi, log in, and send your questions that way. But let's go back to our guests. Mr. Zaid, what do we now expect the market to do in the horizon that we can see, we can foresee? Well, let's say that what we heard is our official global outlook, but that's mainly for a euro investor, for someone who invests in euros. But you need to realize that there's a major difference between the yields in risk-free actives for a euro investor, where German bonds under 30 years have a negative yield, and an investor in Czech crowns, where it's positive. You can see this in a chart that we've prepared, which shows you the yield curves and their comparison. You can see that even Greek bonds, which are some of the riskiest in Europe, have negative yields in 5 years. So Czech bonds, which are often around 1-2%, or just above 1%, or even above 1.5%, are more attractive. So if you're putting together an investment portfolio, this gives you a different starting position. You don't have to be as focused on risky assets. A euro investor today, investing in bonds, basically is having a guaranteed loss. What would you add, Mr. Šimčák? Well, I would say that the Czech crown investor does have a positive yield, but once you subtract inflation, you get to negative figures again, which is somewhat better, but still negative. So it's better than having the privilege of lending money to Greeks or to Portugal for 10 years for zero or a loss. What I found interesting about what Didier said was that there will be a pivot from risky high-yield bonds to assets, there will be a rise in dollars, so you could comment that. Of course, this is related, because as you know, risk yield is based on a credit premium above risk-free actives. And because we have risk-free equities at zero or at negative, and risk-free are near the minimums, the historical minimums. So we're now comparing risky assets, which bring 2-2.5%, and equities that bring in some 4%, just in terms of yield. Because equities today, we've heard that they're very attractive, and they're attractive from this relative perspective. When you're comparing equities and other forms of assets, that's very important. And I would add to that if I personally have to pick between lending money to a risky company at a low interest rate or become an owner by holding stock of a good business, a good company, this long-term strategic view is more interesting. And one more thing. We've heard a lot about cyclical assets, cyclical equities, emerging markets. Of course, the last 10 years, these have been dominating the market, mainly the strong growing companies, particularly from the US. And the indexes were carried by the largest companies, Microsoft, Apple, Amazon, those. So could you say something about the markets from this perspective? Yes. The positive development on the markets in the last couple of years, what happened is that from the absolute perspective, the market is not cheap. It's valued quite high above the average. So the equities are attractive because in the relative view compared to other asset classes. But even within equities, there are enormous differences, greater than in 2000, compared to the technology, growing equities, and those value-based, those traditional companies that are not as dynamic, but who are very stable financially. So investors, when they see the flow of money, the amount of money in the economy, and see that there are no alternatives, they look for those equities that give you something that is not as tied to the is tied to the economic cycle, because the technology firms are not that much, something that is tied to the economic cycle. But if you believe in a recovery next year, then you can afford to accept this risk of this economic recovery and invest in cheaper options. This is clearly related to the return to normal life, the return to normalcy. Is vaccine the game changer? Well, it is a game changer, undoubtedly. On the other hand, I'm not an extreme optimist here, because we still do not quite know how quickly we'll have it, where we'll have it. And there can be a huge difference between whether we manage to vaccinate half of the population by March, then you have a negative impact only on the first quarter, or if it stretches throughout the year. And different sectors will be impacted in different ways throughout the year until the second or third quarter. Then, of course, the economic results of companies and the economic situation, GDP of different countries and so on, that will be completely different. Apologies for interrupting, but in this optimistic moment, let me just jump in for a minute, because we have our first questions from our viewers. Let's see what they want to know. You can keep sending in your questions through the Slido app. You can ask in this box that you'll find on the Amundi website or through the Slido app. The first question: can you estimate the development of inflation and interest rates in the Czech Republic? What do we expect to see in the next year in the Czech Republic is interest rates to remain where they are. At most, if there is a severe inflation pressure, I can imagine towards the end of the year one hike perhaps, but I don't think it's very likely. This would be probably very different compared to the rest of the world. Here in the Czech Republic, what we're struggling with for a long time is this external and internal influence. The internal says that our interest rates should be higher, should have been higher a long time ago, because there is inflation pressure, has been for a long time, and our inflation rate is above the target of the National Bank. But if you see the external pressure, how cheap money is everywhere, this leads the central bank to be more careful. So our estimate is inflation at about 2–2.5%, slightly below 2019 or 2020, but stable interest rates. And the inflation pressure, by the way, that's a thing that can change very quickly, not just in the Czech Republic, but in Europe, in the United States, because there's a huge supply of money, which obviously brings that. I think we can manage one more question. Another viewer is asking, do you think that equities are expensive? I sort of mentioned this. Yes, they are. From the long-term, absolute sort of perspective, that valuation really is above average, strongly above average. On the other hand, it's also a matter of the relative perspective. What else is there to invest in? And all the other asset classes are much more expensive. So, from this perspective, equities are attractive, give you solid yields, much higher than bonds, and the growth potential is clearly there. Thank you very much, both of you, for the analysis and for your answers. And see you in a minute.
Yes, without a doubt, there is light at the end of the tunnel. The question is, how do we get there? The COVID-19 pandemic is shaking the financial industry and global economies like never before. The fastest bear market in history, and we had the fastest bull market in history. Never we've seen that before. It's unbelievable. And now we're back to the same level of markets than we were at the beginning of the year. So it's like nothing happened, because they're all on the anticipation, the vaccine, etc., recovery. At Amundi, our focus is helping investors making informed decisions, being a strong and stable partner that they can trust. And this is particularly important at a time of heightened uncertainties. We believe that the discipline of investing regularly is key to success. And now is the time to start the long road to recovery.
Okay, and now we would like to test you, our viewers. What is your estimate? You have the opportunity to guess. Vote, tell us your opinion. Who do you think in September, who invested more, men or women? We look forward for your guesses. We will come back to the results, but you've probably also noticed that I'm not alone. Jan Kupski is here, the head of marketing, and regional manager sales promotion Miroslav Milčuch. Welcome, gentlemen. You are here to talk about why and how can we make people here in the Czech Republic to invest more. Mirek, for you it is normal, it is part of your life, but do you have an example that could prove it to the rest of the population? I always use the story of Robinson Crusoe, who happened to be on an island and he stood in front of a decision whether to make use of everything that was there on the island and eat it, or whether to store at least a quarter of the yield and use it to obtain the next year's produce, because he didn't know for how long he got stuck on the island. And we are in the same situation, basically. Because if you want to survive, you have to invest. So the story of Robinson Crusoe is very inspiring, but could you also support it with numbers? Why is it important to invest? I remember 20 years ago when I started my first job in a bank. Markéta, you mentioned it yourself. At that time, you had basically the only opportunity to use your money to get more money. And when I used maths, if you invest regularly, it takes you 121 years to get to the threshold of 1 million, which is not a huge motivation. But I had an enlightened colleague, and he showed me that if I change my perspective, I'm able to make it shorter from 120 years to as less as 10 years. And that is something that brought me to the world of investment and absorbed in it ever since. Miroslav Milčuch's way was very natural, but Honza, how would you motivate people to invest more? So for me, the main reason is inflation. We could define it, describe it, discuss it, but I think that the next picture speaks more than 1,000 words, and it basically shows how the value of a 100 Czech crown note has decreased, from 1995 to 2020. Basically 100 Czech crowns became 38, so the 2/3 are gone. So how should you invest? For us, the best way is equities and also real estate. And as this picture shows, both those two classes can beat inflation, which is not something you can say about your regular bank account. These investments, of course, are the best decision for investors who have a long-term horizon. If you're not thinking long-term, this is probably not for you. Thank you, gentlemen, but don't go anywhere, because we asked our viewers who invested more regularly in September, men or women? I'm really looking forward to the results. And the results are here. So gentlemen are smiling already, and it seems that the result is not surprising. 59, now 58% think that it were men who regularly invested more in September. Any surprises there? Not really. our viewers really know their stuff, because the real results actually is exactly 60-40. But what's also good for investors is that the actives, the funds they are picking, really are those of regular investments. Those are mixed funds and equity funds. Equities funds are those that we actually picked to show our examples. CPR, disruptive opportunities, that's the one that has profited the most from the COVID era. Is there something you want to add, Mirek, or has everything been said? I think that's it. And really an excellent estimate, 6-4, 60-40, they basically guessed it right. Perhaps there are more women and it will change, but let's come back to that in a year. Thank you very much, gentlemen. Let's continue. Let's move to our next bullet point. In this crisis that we've all been living through since spring, who has adjusted? Those who have adjusted could have made the most of it. We have Mr. Josef Dvořák. What has changed in the business strategy in order to survive? What we've seen since March in sales is you must be emotionally more hard. Investing is not easy, but we've seen two sales teams, two kinds of sales teams. You either adjusted or you did not adjust. If you have, you were able to reach your clients, and if you didn't, you were just basically looking for excuses. The second area of adjustment, that you basically can't meet with your clients between four eyes, how to make the best of virtual platforms. That's the second most important change, I think. And the third one, even though many people forget it, is the management of sales teams that had to change. There is no longer an opportunity to having dialogues in the kitchenette. The best sales managers spend less time with their people, but more often. That used to be the case. You mentioned home offices. It's not ideal for everyone, for salespeople, of course. It's not ideal, but it could be for some. But what's the most important thing for salespeople who have to work from home? You must be active, but intelligently. Intelligent activity. You must set your priorities, you must set what you want to do on a particular day, and in the most successful teams, even though it's not something that you could project, with the best teams in the Czech Republic, we saw basically double the amount of meetings. The meetings have changed, that's true. It's not about selling, it's more about forming a relationships, but being active and staying active is vital. Without coffee, without meetings, how can you actually make it work? I don't think it has changed all that much. It's all about customer service and customer experience. Confidence must be around. For every salesperson, their success must be because of good work. It's not because we are selling products we want to sell, but it's because we want to sell products that our customers need. Thank you very much to Josef Dvořák.
What if you want more than just yield from your investments? What if you want them to have some positive impact on the environment, on society, on ethics? And that's why we have investment funds with the ESG policy, where E stands for environmental, S for social, and G for governance.
The world has changed. The climate emergency and the rise of inequality are upon us. They are posing very big problems, which need immediate attention and immediate action. As Europe's largest investor, Amundi has the ability to play a role in facing these challenges, to make a better world together with its clients.
Our ambition is clear. To quote famous French President General de Gaulle, which says that in a complicated world, one must travel with simple ideas.
We believe sustainability matters. In our day-to-day lives, we can make small changes to improve the world around us. We ask companies to do exactly the same, so our clients can trust us with their savings. But now we're going a step further. By 2021, we will integrate an environmental, social, governance approach through all our investment processes and voting policies. Meanwhile, we will ramp up our efforts on themes like inequality, climate change, and education.
Firstly, we intend to generalize the inclusion of the ESG approach in all the investment processes of our funds. We intend also to double the fund invested in specific initiatives linked to the environment, the energy transition, and with a social impact.
We are not afraid to challenge companies and say no when we disagree with their practices. Voting is a way for us to act on behalf of our clients because we are in this together.
Our voting policy is driven this year by two priorities. The first priority is related to climate change. We ask all the companies to publish their information relative to the greenhouse gas emission. Second priority, widening inequalities, which drives social fractures. We strongly encourage companies to publish equity fairness ratios.
This is just the beginning of a long journey. Making changes is not easy, but once we make sustainable investing mainstream, we can achieve more than we seek.
The philosophy of ESG is something that we will hear now more. Let's go to Paris.
We can definitely see the rise, definitely. And, there are multiple forces at play that are the pillars of this rise, and that are also the pillars of the fostering of this rise. The multiple forces at play are first the changes in society that are surrounding us, and therefore the level of awareness about sustainability issue that triggers a recognition of the needs to adapt our model, should it be related to climate, but also to social fragmentation. The second force that plays, the multiple coalitions led by investors. I mean, with central banks, for instance, playing an important role, but not only the insurance company, the bank, the pension fund, sovereign wealth funds. And the third that you should not have ignored is the acceleration on the side of the policymakers that is further shaping the investment framework and fostering this rise. Concretely, let me share with you the outcome of our research on that matter, because we have performed a lot of things on that respect, really to understand the dynamic. And it's not only to look at the past as a whole, because we are on a transformation process, we should be very frequent and broad in the way we look at this evolution of the market. So, if I'm sharing with you the outcome of our research, prior to 2014, there was no clear outperformance from ESG investing. Okay, you cannot see a clear impact of those factors into market prices.
We will continue. Jean-Jacques Barbery is head of institution and corporate clients division, and he's also a supervisor of ESG. He has described quite interestingly how ESG worked in a crisis.
It's a pleasure to be with you today to run this session dedicated to ESG. So this is a very good question because it's a question about the why. Why do we see these results? And spontaneously, one can advocate that it's just logical. If you're a company that has a better ESG profile, it means that probably you run your business more from a sustainable perspective, and therefore that in the long term, investors are considering that your performances are going to be better, and this is reflected in the price of your stock. I would say that's the theoretical approach. When you go a little bit into the details of that, things are more complicated. Because at the moment, it's hard to find true evidence of the fundamental, I would say, analysis leading to these results. And we tend to consider that for the moment, what we see in terms of explanation is more an effect on the demand on the prices. Let me explain that. It's quite easy to understand. If you consider that ESG is a more and more popular concept among institutional investors and retail investors in particular, therefore, progressively, these investors are integrating ESG objectives into their portfolios. This generates, I would say, mechanically, a demand for companies that have a better ESG profile in the market. And as we all learned it at school, if you have this demand effect when the offer is limited, by definition, this has an effect on the price. So I would say at the moment, what we see is that we can explain the impact on the price due to the fact that the ESG is progressively being mainstream within the market, and therefore this has an impact on the prices. So I think this is important if you're an investor, because again, as I was mentioning before, it means you need to take ESG into account whatever you want to achieve, because this is a factor that has some impact on the market already. Second thing that is important is that it means that in the long run, it's more and more, and it's going to be more and more important to look at, I would say, the fundamental ESG analysis. Why? Because it's maybe not the best strategy to invest money or to deploy money on companies that have the best ESG profile only, but also to bet, or I would say to invest on those that have the capacity to improve. Because here you can consider you have the capacity to capture a potential premium in the future. And by the way, from an impact perspective, one can advocate also that you're going to meet your goal because you're going to finance companies in their own transition, climate transition in particular. So I think, to be very honest at the moment, we don't totally know how to attribute this overperformance on ESG on the markets. Clearly, it's linked to a demand effect. Clearly, probably it's linked to fundamental elements that need to be taken into account in the portfolios. And this is one of the things we are exploring at Amundi, both sides of the equation. First, by full integration of our ESG approach in all our open-ended funds, meaning by there we capture the premium that is on the market for companies that have a better ESG profile at large. And second, we are also launching a number of new strategies that we call ESG improvers that have the ambition to select the companies based on their potential of appreciation in terms of ESG and then therefore capture long-term value in the future. So I think this is a very good question because we are now at a stage where we have the capacity to assess the contributive part of each of the ESG factors and even more of the criteria that are behind these big factors on the performances of companies. But before answering to that question, I would like just to stress the fact that everything that I said before has been, I would say, massively reinforced by the crisis. The ESG trend in terms of impact on the prices, in terms of relative performance, has been accelerated by the crisis we have entered since a year. And for instance, since March 2020, we can see that it's mostly responsible investment funds that first have the best performance in relation to their peers, and second, that have kept their capacity to attract some flows, where most of the flows that were not incorporating these type of approaches have seen outflows. This being said, it's very interesting to look a little more in detail on the relative contribution performance of the different factors. Clearly, at the beginning of the ESG journey of the global markets, it was the E that was the most, I would say, contributive factor, with differences in time depending on the geographies. It's much more recent than the E factor has an interesting impact on the US equities market in comparison to Europe, where it started much earlier, nearby the Paris Agreement, because investors have started to reflect that concern, the environmental concern, into their strategies, notably through risk mitigation. So the E part of the equation started the journey. And I think what is very interesting is that since 2018, we can see that the S factor is now more and more a positive contributor. And this is reinforced by the environment we are living in, which is unfortunately the environment of a very deep social crisis that is affecting the Western liberal democracies. And this is something that you could showcase in Europe, but also in the US. So we're strong believer that the S factor is going to be more and more important in the future. And even a step further, what we believe at Amundi is that progressively it's the conjunction, the coordination of the S factor and the E factor, so that is in a nutshell encapsulated into the concept of fair transition, how to make the transition socially acceptable. It's the combination of the two that tomorrow will be the ones that will have the most impact on valuation of companies on the markets. So I would like to thank you very much for your attention. I wish you a very good crossroad.
That was Jean-Jacques Barbery. Thank you very much. And now let's look at specific products. One of the typical examples of responsible investment offered by Amundi is the MASF fund, the Multi-Asset Sustainable Future Fund. This is a fund that tracks positive impact on the environment and on society.
More of our clients are asking for investments that help improve the world we live in now. Amundi Fund's Multi-Asset Sustainable Future offers that opportunity. In this fund, we only invest in companies and governments that we believe have a positive environmental, social, and governance impact. What does that mean? Well, for example, the impact a company's business practices can have on the environment or on society. We automatically exclude companies that get most of their revenues from gambling or tobacco, for instance. We exclude governments with poor standards on climate protection or significant spending on arms. We are convinced that companies which are managed responsibly also offer you a better return over the long term. So here are 3 reasons why this fund can be the start of your contribution to a better tomorrow. 1. Every company and government in our portfolio has been assessed to meet our high ESG standards and has the potential to offer attractive returns. 2. Given today's market uncertainty, we offer a low-risk product to seek to protect your investment. 3. We have the benefit of experience. We've been doing this for over 30 years. Make Amundi Fund's Multi-Asset Sustainable Future your fund of choice for a better tomorrow. Together, we can make a difference.
And the portfolio manager of MASF is Jörg Maashuber, who will now explain why we should invest in this particular fund.
Amundi Fund Multi-Asset Sustainable Future relies on a consistent and performing strategy that had been launched in November 1986 through an Austrian domiciled fund. This strategy achieved a strong risk-adjusted return since inception, with a gross annualized performance of 5% for a volatility of 5%, also benefiting from a 5-star rating by Morningstar. In managing this strategy, we can say we experienced different market regimes and of course various crises, focusing on the most recent one, the COVID crisis. Amundi Fund Multi-Asset Sustainable Future succeed to mitigate its drawdown, being more resilient than its peers in the market shock and also being able to enjoy the market recovery to deliver close to 4% of gross performance on a year-to-date base. This is a quite good result considering that we maintain a conservative risk profile and that most of the fund's assets are invested in Euro fixed income universe. We see 3 points that can explain such results. First, the qualitative picking that leads to bias the fund's exposure towards the companies and issuers that benefit from good fundamentals, growth potential, and more important, a real ability to address challenges related to their respective sector, notably thanks to their sustainability policies. Second, the exclusion of the traditional energy sector like oil, based on our conviction. Actually, we prefer to get exposure to companies related to renewable energies, producing, for instance, wind turbines, or in industrial companies specialized in providing water technologies and infrastructure. Overall, being out of the energy sector helped a lot to mitigate the portfolio volatility and drawdown during the COVID crisis. Finally, the structural exposure to safe haven assets like Euro core government bonds that also played a key role in limiting the fund's drawdown during the recent period, and also in the past, like in 2018. The COVID crisis had led to various plans aiming to support economies, people, and also transition towards better practices and infrastructures for the planet. And this is exactly what we benefit from in Multi-Asset Sustainable Future. For instance, we are investing in a renowned Danish multinational power company that has shifted a long time ago from fossil energy to renewable ones. This company saw quite early the potential of offshore wind, the so-called wind turbines at sea, as an alternative to coal, and has been able to increase its share of green energy from 17% to 80% over the last decades. By moving from a domestic Danish fossil-fueled business to one of the European's largest green energy developers, the company benefits today from a position of global and leading player in its field. The sustainability strategy of the company is focused on addressing the climate emergency, being committed to help limit climate change, which is central to progressing action on the UN Sustainable Development Goals, the SDGs. On a year-to-date basis, the valuation of the company has grown by 60%, enjoying a position of leader in green energy while benefiting from fiscal stimulus and Green Deal like in the area of renewable energy. This is the perfect example of holdings we like to invest, as we believe the company that are focused on improving the practices along their environmental, social and governance pillars are better equipped to identify the risk and opportunities that can lead to better returns in the run. The COVID-19 pandemic has fundamentally affected the global economy and financial markets. At the same time, we have also seen that investors' focus on ESG has remained strong, emphasizing the importance of incorporating ESG factors when making investment decisions. Several recently published papers have highlighted the resiliency of ESG solutions in the recent sell-off, in terms of both flows and performance generation. To us in Amundi, it appears that COVID-19 has proven that ESG integration is a vital component in the investment process of most funds and especially conservatively managed funds. By focusing on companies and issuers that are truly improving the practices or their impact within the ESG framework, an investor can maintain an exposure primarily to those players that are best equipped to identify the risks and opportunities in their respective fields. Fundamentally, ESG integration can be a great risk management tool that avoids investing in the most fragile part of the market, which is especially relevant in a multi-asset investment framework.
That was Jörg Moshuber. Thank you very much for that. And now it's time for Petr Beneš, the co-founder of the 6D Academy. What does he think about the ESG principle? This ESG line will in the near future be more and more important for most business people and for companies here in the Czech Republic. We at 6D do a lot of these new trends in business models of various companies. And what I see when I meet company owners is that they really think this topic is important. Increasingly often, they focus on zero waste or long-lasting design. So we're going back to the behavior that we used to have some 30, 40 years ago, when the main thing was to make a high-quality, sustainable product. And it wasn't so much about mass consumption. So you have things like reuse, refurbishment of furniture, clothing. This is more and more important, particularly for the younger generation. And these topics, I can see them today increasingly often reflected in the business models of some new startups. And the ESG line also can be found in large companies which do what we today call globalization, which is a merge of global and local, where they use the benefits, the economies of scale in their office processes. But in terms of relationship with the customer, they adapt to the local specifics of the individual markets. And sustainability as such is ever more important. That was Petr Beneš. And here in the studio, we'll talk about MASF. Here's Josef Dvořák again. You're not a salesperson yourself, but how would you sell this particular fund? Well, you are right. I'm not a salesperson, but I saw this fund very briefly. But I know the old the rule of sales, which is that logic tells and emotion sells. So I would focus on the individual details, how the fund really works. But as Mr. Beneš said, I would focus on the emotion. I would sell this through the emotion. The emotion of the link to nature, responsibility, that we want to have companies that do business legally, sustainably, correctly, properly. So I would not offer this to a person who drives to me with a 6-liter engine. He's very obese and smells of cigarette smoke. But I would offer this to someone who clearly has a different emotional relationship to the principles of ESG. Well, it's always worth trying, but I see what you mean. Offer to those who could buy it. Let's look at another fund in the offer. It's the CPR Global Disruptive Opportunities Fund. Now, there's a legend about this in Amundi, that the boss of Amundi Japan reportedly went to the head of their mathematics department saying that they need for a Japanese market an AI fund. Others said, no, that's too complicated. We need iCloud, we need big data, we need robotics. That's too complicated. But Amundi did it. Joined forces with Deloitte, and for 6 months kept looking, kept thinking what sort of activities to focus on, where you see the greatest disruption, where are the structural changes going on. And what did they find out? They came up with 4 circuits, 4 areas, and 28 subjects, and from this they pick equities of some 60 to 80 companies that we believe will change the world. And representing this fund,
imagine, reimagine the ways of the past, give birth to new leaders, create new futures, and reverse the supposedly irreversible. The world is constantly being reshaped by the megatrends of our time. Everything moves, everything changes, disruption is everywhere, affecting everyone and everything, shaping every day. Disruption changes the rules of the game, faster, farther, more sustainable. In healthcare, in industry, in the digital economy, and for Earth. Take a look at the world. Look at it closely, because tomorrow it will be unrecognizable. Let's be disruptive.
and representing this fund is Andrea Mossetto, CPR investment specialist. He will explain why to invest into this.
Hi everyone, I am Andrea Mossetto, the head of investment specialist at CPRM. CPRM is the thematic boutique of the Amundi group. We manage today 14 billion asset under management with an impressive net new cash progression in the past 5 years. We're going to talk today about our disruptive opportunity strategy with 4 years track record, 4 billion asset under management and 5-star Morningstar. Since the beginning of the year, we have realized an impressive performance of 34% net of fees as of the end of November, and in annualized term, 17.5%. We have three main differences compared to the other disruptive funds out there. The first one is that our search for disruption is in all sector and all geographical zones. As of the end of November, we had a slight overweight on IT, healthcare and industrial, and we have one of the lowest exposure to the consumer services, because we don't hold things. The second big difference is that we have an all-cap approach, but we have a small bias towards small and mid-cap. 25% of our portfolio is exposed to small and mid-cap in order to find the FANG of tomorrow. And last but not least, our robust portfolio construction that enables us to deliver the best risk-adjusted return based on our multi-risk parameter framework. In terms of performance attribution, since the beginning of the year, 70% of the performance is coming from the digital economy and the 30% from the Industry 4.0, Life Science and Health, and Earth. We have benefited since the beginning of the year of the working from home theme, like cloud, fintech, but also from the reopening of the economy and from in the health industry about the news on the vaccines. We are positioned today with a barbell exposure toward growth sector and cyclical names. On the growth side, we are exposed to cloud, fintech, big data, and renewables, and we have added and we are adding more and more a cyclical tilt with an increasing exposure to Industry 4.0 and renewables. That's all on my side. Thank you for listening.
That's it, said Andrea Mossetto, and we heard disruption, which is a very dramatic sort of term. It sounds very fateful, and it was fateful for Tomáš Vránek, the founder of ICE Industrial Services. What does disruption mean to him and his company?
So disruption for us means a change. We are a company that is using agile methodology, and welcoming changes is one of the basic principles of agility. Especially in 2020, we see that changes are everywhere, all around us, and those who are the first to react to the changes can be successful, both locally and globally. So we, as a manufacturer and provider of assembly lines, we see with our clients that those who have invested in these tough times, who have invested in their development into automation, robotization, are those who will be the winners. For example, one of our big companies, a manufacturer of trucks from Sweden, has invested 3 billion into automation. So that's where I see the disruption and change and how we welcome it. Thank you for your experience to Tomáš Vránek. And let's go further to Poland Capital Global Growth. Can you imagine your morning, your day without favorite cereal, coffee? Could you also imagine that you do shopping and you don't pay with one of your favorite credit cards? There are many other things that we use every day, food, garments, everything that I mentioned. These are very stable companies, and the Poland Global Fund has 25 to 30 of these companies in it. Some of them are even monopolies.
What paths should investors take to capture growth in a market still full of uncertainty? Many investors look to equities, as they can be a source of returns, income, as well as a real sense of influence. However, the equities market consists of businesses of varying quality, featuring different characteristics that can make them more or less appealing as a source of growth. Seek to capture global growth by investing in high-quality businesses with Amundi Fund's Poland Capital Global Growth. So, what do we mean when we say high-quality business? Broadly speaking, there are two fundamental attributes we look for: strong financials and clear, sustainable competitive advantage. We believe these attributes can deliver a big advantage in terms of providing a portfolio with higher potential return and an improved risk profile. High-quality businesses exist on a growth spectrum. We balance investments across this spectrum to provide stability throughout market cycles. We believe strong financials and sustainable competitive advantages are hallmarks of long-term growth. We always stick to a long-term oriented mentality, because short-term share price fluctuations don't always reflect a business's true value. But eventually, share prices follow earnings growth, as high-quality businesses' excess earnings compound over the long term. There are 4 steps that filter the stock universe down to the 25 to 35 highest quality businesses. Putting our approach into practice, the investment process. We invest across the growth spectrum. Why Amundi Fund's Poland Capital Global Growth? Established solid partnership with Amundi Asset Management since 2015. A track record of success. Global network of local experts. 5-star Morningstar rating and a 5 Globe sustainability rating. Amundi Fund's Poland Capital Global Growth.
Portfolio manager of this fund, Poland Capital Global Growth, is Jeff Miller. So it's probably a good idea for him to introduce this fund.
Hello, everyone. My name is Jeff Mueller, and I am a co-portfolio manager on the Amundi Poland Global Growth Fund. Our overarching goal for our strategy is to construct a portfolio of roughly 25 of the highest quality, most competitively advantaged, and best businesses on earth that in aggregate can compound earnings per share at about a mid-teens rate, so roughly 15%. And we hold the firm belief that if we buy these businesses at fair prices and hold them for long periods of time, and our average holding period is in excess of 5 years, that over that long term, the stock appreciation of each individual business should mirror the earnings growth of the respective business and thus the portfolio as a whole. That's been the case since inception of the strategy, where our client returns have matched our roughly mid-teens earnings growth for the portfolio. I've been at Poland Capital for 7 years, and my co-portfolio manager, Damon Ficklin, has actually been at the firm for over 18 years, and in fact is the longest tenured employee at Poland Capital. In terms of portfolio construction, we use guardrails, which have been in place for over 30 years, to narrow our universe. And we combine these with fundamental, bottom-up, and independent research from our headquarters in Florida. Thank you, everyone, for your time. And if anyone would like further information, it can be obtained from your Amundi representative. Thank you.
That was virtual Jeff Miller, and Petr Šimčák is here, he is alive. Hello, Peter, once again. Why should we invest in this particular fund? Why should we invest into Poland Global? I think that the story is quite easy. We saw the graph. If we want to pick the two most important parameters, you need bigger growth and low risk. If you managed, you were successful. If you did not manage, you did not succeed. But when our colleague sent us 30-page presentation recently, he asked us, you can only send this one graph to summarize it, basically. And we've also mentioned several times that there are 25 to 35 of the biggest companies in the world, most growing. I think it's great to say that every single global company has a seat somewhere, but every global company basically works worldwide. And if you want to create a consecrated portfolio, because we are choosing out of 3,000 titles, if you want to pick 25 or 30, you can't basically have any sector or regional restrictions. You must go global, because 50% will be the US anyway. But Nestlé from Europe, Alibaba in Asia, it doesn't make sense in this strategy. Petr Šimčák, you will come back. You will present something, I think, but see you in a minute. And I would like to welcome Miloš Dzurilla and Marek Niesler in the studio. You are not here by chance. You want to show us which of the funds is better and how to choose one. And you will do this in a manly manner. Not a fight, don't worry. But this will be a battle of salespeople. So that you can imagine it better, our digital studio will now transform into a boxing ring. So the atmosphere is here, the audience is here. So what is this? Miloš Dzurilla will talk about the GDO fund. He will have 1 minute to sell it to you. Marek Niesler will have 60 seconds to present Poland Global. Your role is vital, because it is you, viewers, who will decide who was the better salesperson, and you can vote again in the app in Slido. On the right side, there is a small box and you can click and vote. Or the other option is to register on sly.do and vote there. And now, are you ready, gentlemen? I am. You don't need a warm-up? 3, 2, 1, go. Dear client, most of the people who we meet now are sad that they did not invest 10 years ago into Google, Microsoft, Amazon. Don't repeat their mistakes. Invest in disruptive, because we are looking for the future leaders right now. Thank you. I can see that you are quite confident. You did not use the whole time. You didn't need it, but your competitor is also looking forward to his presentation. Are you ready? So 60 seconds for you and for the Poland Global Fund. Poland is an equity fund that invests in the best companies in the world. Only 25 to 35 of the best companies in the world are allowed into the fund. At the same time, in the past 5 years, we didn't have a single calendar year that would end in a loss. If you pay with Visa or MasterCard, or if you want to buy something from Louis Vuitton or from Alibaba, you can be sure that as a customer, you are not the only one who are using these services, and your place among the shareholders of the best companies in the world, you can buy it, starting from 500 Czech crowns a month. You have 10 more seconds. Small dance. That was Marek Níser and his presentation of Poland Global. That's the time. What was said was said. And in a minute we will see the results. And the opportunity comes right now. So please vote. You can get your refreshment, and may the better win. We have talked about 3 funds. And let's sum it up. Petr Šimčák, I think, is the best one. How did you like the battle? It was perfect. I'm a fan of both, of course, and I will present the prize for the better one. Let's sum it up. So there are 3 great funds. Let's say 3 bullet points to each. Poland, I think, higher yield, lower risk. Well-known companies, which for someone could mean security in the long term. And 3, simple but not easy. Disruptive Opportunities Fund, that's a topic that has a story. It's a topical investment. Even coffee must be sold with a story today. And if the story is a good one, but the coffee is not good, it's not enough. But I think we have a strong story and we have strong results. And here I would differentiate between Poland and Disruptive Fund. They are both equity funds, growth style. But the main difference is that Poland is in the leaders, in the winners, the companies. Disruptive Opportunities has smaller and medium-sized companies, those future winners. And the last one, MAS, Multi-Asset Sustainable Future, that's a bit more complicated product. It's a mixed conservative portfolio. Here I think I would stress that it's for more conservative investors, for those who are a bit worried about volatility, for people who know what they don't want. They don't want fossil fuels, nuclear, they don't want arms. But they are interested in ESG, what they do, how do they do it in their product. And for them, the sustainability, the impact, climate change, renewables, that's all what Musk says. That was the story of these three funds, but it was not complete. We asked you to ask questions to Petr Šimčák. And let's have a look at those questions. Let's start at the top. But it's not, it is a good question, but it's not towards these three funds. Perhaps the one at the very bottom. Coca-Cola, Pepsi and Nestlé are considered one of the biggest polluters. What is the position in Amundi? Will you lose them? I think it's a good question for portfolio managers, but I wouldn't agree. Because the question is, Nestlé is considered in ESG portfolio, it has the A grade. So it's a bit more complicated than that, and you can't really simplify it. And with regards to sustainability and ESG, I think that the transition is also important. It's not just what they have done, but whether they are also conducting steps towards the future to change what's not worked. And we know that companies have room for improvement, but if they are on the right trajectory, it wouldn't make sense to lose them. So, the results are here. Who won the battle? Was it GDO and Mr. Dzurilla, or Poland and Mr. Nisse? So, here are the results. And it was really close, 51% for Marek Nisler. Marek, please come back and join us on the stage. Good afternoon once again. Congratulations. And Mr. Šimčák will now present you with the trophy. Thank you, gentlemen.
And we are getting close to the end, but one thing we'll still have time for is Mr. Roman Pospíšil, the Deputy Rector at Amundi. So what's your takeaway from this conference, this event? When they told me I'm supposed to conclude this event, I was wondering what kind of message am I to give you here? And when we were doing this physically, we called this the Crossroads event. And when I was thinking about that, I realized that this is a crossroads. And when I kept thinking about that, I realized that this is not just one crossroads. This is a set of crossroads, really. So many things we need to do. And this whole event should help on these crossroads, whether it's simple, when you just commute to work, you know everything, you know the road, you just need to just follow the rules, even if the rules change sometimes. Sometimes you're in a different city when you don't know what's behind the corner and you don't want to make a mistake. Sometimes you go to India and end up in America. And Columbus became famous, but it's not always like that. You don't want to just blindly stumble in the dark. There are so many questions that we handle during coffee breaks at physical meetings, but there are also the business things. Of course, I want to thank everyone for taking part in this, particularly those who managed to follow us all the way to the end here. And I'm looking forward to seeing all this help you find the right way in the crossroads of your life, to understand the rules that are now changing. And I will be very happy if the next time that we invite you, you accept the invitation and take part. Thank you. That was Roman Pospíšil. Thank you very much. Now, there's really just one last thing to do, which is to thank everyone in the studio, which were our guests, salespeople, those who sent their digital greetings because they could not come here to Prague, and of course, a huge round of thanks to all of you, the audience, for your questions, for your attendance, for your patience. Thank you very much.